This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Mona Elisa. Mona is the founder of the Melon protocol. Melon is an Ethereum-based protocol for decentralized on-chain asset management, and Melon empowers anyone to effectively set up, manage, and invest in customized on-chain investment vehicles. Pretty cool. Welcome to the show, Mona.
Thanks. Great to be here.
So to begin with, Mona, I think to really understand what Melon is, what the problem is that you're trying to solve, and the unique place that Melon has in the DeFi ecosystem, I think it'd be really good to understand your personal background, a little bit about, where you come from, your career path, because I think that is really important context for Melon. So let's get into it. Why don't you introduce yourself and tell us a little bit about your personal backstory?
Yeah, sure. So I finished my studies in London back in 2003. And during my last year, I had interned at Goldman Sachs on the trading floor. I was very excited to work on a trading floor, and fortunately, they made me a job offer. So literally my first job was on an equities trading floor, market making and prop trading. And it was a great time. I spent nearly a decade there trading all sorts of markets, starting in very kind of small and mid cap stocks, but kind of expanding that year on year. That was really a fun time. In 2011, I went to work for one of Goldman's clients. I moved to the buy side, so I worked for a very large European hedge fund at the time and ran a long-short equity portfolio for them. And in 2014, I was approached by a family office, and they wanted me to launch a long-short equity trading strategy fund. They kind of encouraged me to launch my own fund, which they would seed and take a share in. And that sounded like music to my ears. I was super excited to have my own fund, to be able to grow it. And yeah, I mean, that's kind of everything I'd always worked towards in terms of goals for my career. So I took the opportunity. It was a $20 million seed, which was pretty small in terms of the types of, the size of money I'd been managing previously to that. Over the course of the next few months, managed to raise another $10 million. And we launched, kind of a few months later. I was excited. I was psyched. I was like, this is the best thing ever. And then we launched and the reality hit. And the launch was long and painful. The first day of trading in the fund was like, I don't know how to describe it. It was quite a shock the first week. I had no idea what managing the operational and administrative processes of a small fund looked like. Previously when I'd worked at Goldman on the trading floor and at this large hedge fund previously, we had sort of 4 to 5 operational staff per investment professional within the company. And I never really bothered to question what they did or why they were there. For me, clearly my superiors had made sure that if you were on the investment side, you didn't have to worry about anything else except making investment decisions. And so there was all this other stuff happening in the background that I'd never really been aware of. And for the first time ever, I was having to do these tasks myself. So this was like a real eye-opener for me, the kind of inefficiencies of booking trades, reconciling trades, reporting P&L to fund administrators, figuring out why a P&L discrepancy occurred, digging into, very deep and complex Excel spreadsheets at the end of each day to find out if you booked something wrong or if there was an FX discrepancy or if one of your price feeds wasn't working correctly, or whether it was a fund administrator's mistake. And, this basically sucked out most of the hours of my very long days. And so towards the end of the first year, I, was sort of starting to think, this is not the dream I expected. This is basically me having to do all the operational administrative stuff and still struggling, and basically not being able to focus on the part that I loved, which was the investment decisions, the trading part of the fund. And so I decided that that was not fair to the investors, which I had raised money from. And I decided that I wanted to wind down the fund. And I was really at a loss when I did that, because most of my career, I kind of hoped that one day I'd be able to launch my own fund. And I'd been so excited about this. I'd never really failed at anything professionally before. And this was a really big failure, or at least I took it as a really big failure. And I really didn't know what to do after that, because I didn't want to go backwards in my career, and I didn't really know how or where to go forwards. This for me was the ultimate goal. So I decided to take a year off, just take the time to kind of digest everything that had happened, regain some perspective, and figure out what I wanted to do next. And that's what I did. And I never took the year off. Actually, I took two months off. But I was sat on a beach in Brazil. My brother had been talking to me about Bitcoin for the previous few years. He worked at Google at the time, and a couple of years prior to that, he'd mentioned Bitcoin to me, and he scoffed at me when I said I didn't know what it was. And he said, that's so typical finance. You guys think you know about finance, and you don't even know what Bitcoin is. And so it kind of had lingered in my head, and I kind of ended up reading an article about it on the beach. And I was totally fascinated by what I read. And I sort of jumped into a whole world of learning about Bitcoin. And then that eventually led me to Ethereum. And at one point, I just kind of realized that there was this whole wave of new and exciting stuff happening back in Switzerland, which ironically is where I had been based before. And I suddenly had this moment of, I don't need to take this year off right now. I don't know what I'm going to be doing in this space, but I need to get back there and immerse myself into Crypto Valley. And so I got on a plane back to Switzerland. I immersed myself into the Crypto Valley and met, a bunch of people who I ended up supporting, investing in, or just kind of mentoring. And one of them ended up becoming my business partner at the time. And together we co-founded Melon Token. And the vision there was really, Ethereum for me was very clearly going to tokenize, opening the possibility to tokenize all assets. And if you can believe that all assets will eventually be tokenized, or at least have a tokenized share class, then for me, it's an absolute no-brainer that all the mundane, inefficient processes that we use in finance now, which are built on archaic technology or no technology, are going to be automated by smart contracts. And so with that vision, we started building Melon V1.0 out of Melon Port, and that's kind of how it all came to fruition.
Fantastic. So effectively, just to summarize what you've said there, effectively, the problem that you've identified is that, setting up any kind of traditional hedge fund and the traditional capital markets, there's due to a range of factors from regulations, due diligence, compliance, admin, and all the inefficiencies across the board. All those factors contribute to making it quite an expensive and timely process that makes it out of reach for anyone but the really well-resourced people.
Extremely, yeah.
That's right. How does Melon solve that problem then?
That's a great question. So Melon basically automates the whole process, or writes the whole process in smart contracts so that it can be automated.
Yes.
And so basically what you can do now is, because assets are digital, you can now write a fund prospectus essentially in code. So you can predetermine or customize what your fund should look like. You can still have a written Word document to describe your fund prospectus, but you can actually implement it in code as well. So you can think about Melon as a technology or a software that helps managers customize the setup of their fund in a form type. So you just type in the parameters you want you want for your fund to run by. So you can predefine things like what management fee you want, what performance fee you want, what assets you're allowed to trade in the fund, which exchanges you're allowed to trade with. Do you have certain assets that are not allowed to be traded? Do you have a maximum concentration policy? Do you have a maximum number of positions policy, et cetera, et cetera, et cetera? And you can just customize all of these like rule sets in code and then deploy your fund to the blockchain in a matter of minutes. And also costing, a few dollars versus a few hundred, if you, whatever it is, $75,000, $100,000 minimum to set up a fund. And so basically, this fund now is deployed to the blockchain. It has your unique fund rules embedded in it. And now investors can come along, inspect the rules at an interface level, but also check at a smart contract level if they're able to read code that those rules match the code. And then if they're happy with those rules, they can invest in the fund also directly. So the protocol takes care of investments and redemptions. So it acts like a transfer agent in many ways. It takes care of the NAV calculations. It takes care of the performance and management fee calculations and distributions. It takes care of enforcing any rules that managers have embedded in their funds. So for example, I mentioned maximum concentration. If you had a rule that said you can't take a position that is more than 10% of the assets under management, if as a manager I tried to do that, the protocol would just forbid me. The blockchain technology would just reject that trade. And so you can basically write as many of those rules as you want to. You know, we've kind of written a lot of them already, but you know, anyone can write a rule, and anyone can kind of just connect that to the protocol, and that becomes part of the protocol, part of the contract suite available to managers and investors.
Yeah, it's quite amazing what is now possible on Ethereum and within the DeFi ecosystem, Mona. So effectively, what you're describing is Melon is a decentralized protocol, and you know what used to be, or what would be described in the traditional sort of hedge fund space as, you know, the back, middle, and front office processes. Now, a lot of those processes can, as you've described it, simply be automated away through the use of smart contracts. And yeah, so quite exciting.
Yeah, spot on. I mean, that's exactly it. We automate the job of the intermediaries in asset management, allowing managers and their investors to focus on what they love doing and what they're probably best at doing, which is investing.
So who's the target market here then? Because I imagine, you know, to set up a fund and, you know, I guess allocate capital and make those kind of decisions, you still need to have a fair amount of trading savvy. So who's the target market here for Melon?
That's a great question. Let's start with who's not the target market.
Great,
I would say
please.
that we're not targeting the large kind of BlackRock Fidelities of the world. You know, those
Sure.
guys already have the scale and the size to make, you know, traditional asset management work. What we're really trying to enable and to empower is the long tail of asset managers. And by long tail, I mean probably any fund that is sub $150 million, any startup fund that is below $150 million in starting position is our target market. And I call that the long tail. That is the manager base, the manager audience that has never been served before. Or if they do try to launch, like I did, most of the time, I've heard 9 out of 10 times managers that launch with under $150 million AUM fail within the first year. Because similar to me, they naively think this is the dream, and then they get into it and they're like, oh, I didn't know that we had to do this and this and this and this, and I didn't know that processes were so inefficient. And wow, a big realization for me is, hang on, I'm paying the fund administrator $25,000 a year. I'm paying the custodian $25,000 a year. I'm paying part of my management fee to a platform that's supposed to do all of this stuff for me. How come so much of the burden still falls on me? You know, so what am I paying all of these fees for? And so I think a lot of managers go into fund management or launching their own funds a bit naively like me, without realizing how much work there is to do just because processes are so inefficient. So our target market is just the long tail of managers. We don't really care whether they're good or not. We think that the protocol will help the good ones prove themselves and build a track record. And when you have a track record which is completely transparent, verifiable, and visible on chain, then you don't need anything else. You know, that serves as your badge of honor, that serves as your CV, that serves as your marketing material to investors. Hey, look, I didn't need 100 million to launch a fund. I did it with 50 grand. But guess what? I have a 2-year track record. It beats every other fund you've ever invested in with a lower volatility. And I can prove this to you because it's all on the blockchain. And so now I want a $10 million ticket from you.
Yeah, no, that's exactly right. And look, I love the way that you describe that. That's the long tail of fund managers. That's a really good way of, I guess, describing people like yourself. I mean, you're talking about yourself, you know, 2, 3, 4 years ago when you, you know, were starting up your own fund, and there must be a lot of talented fund managers out there who are just not quite yeah, as we said before, well resourced to set up their own fund, but now they can do that. So, what I guess the next part of that equation though is how do those traditional fund managers, get confident enough to make the switch to blockchain and DeFi, and what kind of interest are you getting, or what kind of awareness level do you think you have in that sort of space?
Yeah. Well, interestingly, we've seen a lot of demand from both traditional and crypto fund managers. So I think there's a lot of small crypto fund managers trying to make it
Sure.
in the space. The sort of $1 to $1.5 million size funds, friends and family,
Yep.
they're being forced to shut down just because they can't maintain the running costs of running such a small fund. And so we've been approached by a lot of these kinds of crypto funds, smallish crypto funds, small to medium sized crypto funds, who are hearing about Melon and saying, wow, this actually could solve all of my problems. And so we're helping them, figure out what they need so that they can launch on Melon. And then there's the traditional guys who, I'd say 2-3 years ago, they would listen and they would say, yeah, this is very interesting, but we don't really trade digital assets right now. Try us again in a year or two, and let's stay in touch. But very recently, some of those traditional guys have been asking more and more questions, and a lot of them are trading digital assets now. And more importantly, a lot of them are being asked by their clients, how can I get exposure to DeFi? And so that is driving them to rethink their internal strategies and whether they should have a DeFi strategy, which is on chain, that they can sell into their clients.
Well, certainly, 2020 feels like the year that are traditional fund managers really going to, really start to take notice of what is happening in the crypto markets. And anecdotally, you would say that maybe that is starting to happen. And certainly the market has picked up a lot this year. And of course, DeFi has been, the star performer to date, hasn't it?
Absolutely, yeah. And it's, it's very interesting when you start to get text messages or, LinkedIn messages from ex-colleagues you haven't spoken to in 10 years plus or 15 years plus saying, hey, how's it going? This kind of DeFi thing, aren't you in this space? Like, can you tell me more about it?
Yeah.
And it just feels like, that is the last 3 years, I didn't have any of that. And suddenly in the last 2-3 months, I'm getting a lot of that. And it's definitely an interesting indicator.
So, and are you still in touch with some of your past colleagues at Goldman?
Yeah, definitely. Yeah.
And so they'll be watching with interest.
I'm sure.
One of the things that is, great about DeFi and blockchain, of course, everything is on chain and everything is transparent and verifiable, and so you can go to the Melon terminal or the dashboard, right? So if you look at the terminal at the moment, you can see that you've got just a little bit over $2 million in assets under management at the moment, with I think 373 funds who've made 932 investments. And then you have there's a Melon leaderboard with various badges, which are, showing who's leading across various metrics. I imagine a lot of this growth has just happened in the last, what 6 months or so? Is that the case?
Yeah, I would say, yeah, 4 or 5 months. Most of it has happened in the last 5 months, I would say. For the first year when we went to mainnet, we went to mainnet in February 2019. For the first year, we basically saw no growth.
Yeah.
A lot of that was down to the fact that our user interface was very hard to use in the first version.
Sure.
I would even go as far to say it was almost impossible to use. As a builder, you might not think that, but as a user who is coming from kind of used to using Kraken or Coinbase to Melon, it was unusable. And so when we started building Melon, or building towards Melon V2, the first thing we did was actually rebuild the interface from scratch. We made it browser-based. We made it a lot more easy to use. And I would say the user experience probably improved tenfold from February 2019 to February 2020 when we launched the new interface. And so that obviously came at a good time because it was right before the pickup in DeFi growth. And And so all of a sudden people were like, oh, hey, this actually works. And we couldn't get it to work before, but now it's actually, it actually works. And it's probably the only comprehensive asset management protocol that's on chain out there. And so we've started to see a lot more traction from that, and a couple of success stories too, which I think have inspired other managers.
Yes, indeed. And well, you're talking about the user experience, and I guess from a big picture perspective, that is really the story of blockchain and crypto and technology itself. Of course, is everything starts off extremely clunky and difficult to use, unless you're a coder or a builder. But that is, I don't know if it's changing quickly, but it's certainly changing. And well, what about in DeFi though? There's all these other protocols that are launching or have launched. And can you point to anyone that is doing something similar, or do you have like a close competitor, if that's the right word, in DeFi?
I don't think that there's anyone building asset management infrastructure. I see people building some products in asset management. Some of them have similarities to what Melon is doing, but I think that Melon is positioned as the only on-chain asset management infrastructure. It's integrated and integrating with all the DeFi protocols natively now. And so that really builds a really strong network effect between Melon and, other DeFi protocols. So, it's feasible that very soon you'd be able to set up a Melon fund that can run a strategy which does yield farming, or lends to market making pools, or a DAO that invests in a Melon fund or manages a Melon fund, or a Melon fund that can invest in options, so i.e. taking short positions or hedging against long positions. And also interact with synthetic assets. And so that's going to be made possible because of all of these native integrations. You'll still be able to get all the core characteristics in terms of NAV calculation, management performance fee calculation, full transparency, full history on chain because of our subgraph. And I think that no other protocol is permissionless like that, enabling a non-technical person to be able to set up a fund with just a few clicks.
Yeah, no, look, I think you're exactly right. But just to finish off on DeFi, I saw earlier today that there's now 6.2 billion is the total value locked in DeFi. And of course, so I saw an interesting tweet, that it took 917 days to go from 0 to 1 billion, 2 billion, 146 days later, 20 days to get to 3 billion, 4 days, 4 billion, 12 days, 5 billion, and, 2 days to get to 6 billion. So it's kind of crazy times. And of course, the DeFi tokens have done extraordinarily well this year. And look, the Melon token, we probably should just touch on the Melon token as well. I think, like all DeFi tokens, it's done pretty well. But yeah, so what is the Melon token? What are the tokenomics? What is the role of the Melon token in the ecosystem?
So the Melon token basically has two main functionalities. The first functionality is that it acts as gas on the asset management network. So when you set up a fund, you pay gas. That gas is actually charged in Ethereum. It's converted into Melon and then burnt. So it acts as a gas token, but the mechanism in the background is it's a buy and burn model. You also pay that on a couple of other functions, like when you claim your management or performance fees, and also when you invest in a fund.
Sure.
So there are just certain functions which charge gas, and the token is one of the few buy and burns, I think, out there. I think Maker and Kyber also have that mechanism.
Yep.
But what that really means is that you can link usage of the network directly to the value of the token. So that means that users are incentivized to, users have a low fee, which is very low compared to traditional alternatives. So they're happy. Token holders are happy because if they can help spread the word about Melon, then there are more users and therefore the token value accrues. Maintainers and developers are happy because this is the second part of the tokenomics. The DAO, the Melon DAO, can basically give grants to developers building on Melon. And so developers and maintainers earn Melon tokens. And so if they do a good job, then again, more users come to the network and the value of the token accrues to the token. And so the other stakeholder is the user. They don't really have any representation in the same way that the token stakeholders, the token holders, and the developers are looked after through the tokenomics. But the users aren't really looked after because they normally don't come into the system owning tokens. And so what we've done is we've designed a governance system that is very user representative. And we've done that by creating a consortium-like DAO. I was more than a year and a half ago now.
Yes.
It's called the Melon Council DAO, and the DAO is made up of technical experts and user representatives. And the idea is that you have to be extremely technically skilled or user representative to be able to join this DAO. And the idea there is that we don't want random or malicious people potentially voting on upgrades. Their identities need to be known. They have to adhere to certain fiduciary duties. They have to be competent when they're voting on things like upgrades because users' funds are at stake with those decisions.
Sure. And just to finish off on DeFi and Ethereum, any thoughts, Mona, on Ethereum itself? Any cause for concern over, the Ethereum gas prices are right up there at the moment, which is really going to put really putting strain on DeFi ecosystem at the moment. And of course, the Ethereum roadmap is, ETH 2.0, look, we seem to be heading in the right direction, but it's as confusing as ever. And, Vitalik is out there doing Vitalik things and doing, saying all sorts of interesting things as he likes to do. I don't know what my question here is, really, just, what any thoughts on Ethereum going forward?
Yeah. So gas prices have been difficult for our users recently, and they have forced us to rethink a lot of things internally. When I say internally, I mean at a protocol level. And so what we are doing immediately we have a short-term goal, medium-term goal, long-term goal, I guess, and how we address this.
Mm-hmm.
The short-term goal is we're currently working towards our V2. We're slimming down all the unnecessary contracts or bundling up things where they can be bundled up in order to be more gas efficient. So V2 will see huge improvements in terms of gas efficiency just because the contracts will be slimmer.
Yep.
The second thing is that, so that's kind of the first thing. The second thing is we're exploring gas hedging options. Making things like gas tokens available potentially to managers. And then more medium term, long term, we're looking definitely at moving trading to layer 2 solution and potentially, we'll see what happens with ETH 2.0. My hope and my expectation is that we'll stay on Ethereum, but if this gas problem cannot get resolved with all of the above, that I've just stated, then, ultimately we will be forced to consider other alternatives. And actually it's part of our roadmap anyway to consider other alternatives. So we'll be looking at things like Substrate, we'll be looking at things like Near Protocol, we'll be looking at things like, Cosmos, anything that really makes sense, we have to research and we have to take a view on. We haven't done much of that, now. We haven't done much research on that now. I think it's just too early in terms of their development. But we're watching, from afar, and at some point next year, we'll probably do a deeper dive into, the progress of some of those protocols. In terms of what concerns me in DeFi, yes, there are a lot of things that concern me in DeFi.
Oh, great. Let's hear them.
Without going into too much detail, I think there's a lot of hype and there's a lot of people trying to monetize on that hype. And what we've seen recently is really experimental protocols being taken to mainnet without audits, without builders behind them who necessarily have financial experience. And and these, protocols can end in tears. They're not they're rushed, they're not well thought out, they're not audited, they're not tested or battle tested. And I think that's kind of, I guess, the world we're in now, because there is a DeFi bull market. But it does worry me, because any kind of big disasters in the space ripple down to other projects in the space who are kind of working hard on security issues, on reliability, on design, and thinking things out more carefully. So I love the fact that everyone is getting so excited about it, but I would definitely spend the time to do your homework on the protocols you back.
Yes, indeed. That's probably very good advice. I don't know if the DeFi speculators will take heed, but never mind.
Yeah.
Last thing I wanted to talk about, Mona, or get your opinions on, because you have such a good background in the traditional capital markets as a trader, especially regulations, and how does regulation look at decentralized finance, and what are the trade-offs, and what do you see happening? Because technology is always one step ahead of regulations, right? And I can't think of many areas of technology where that would be more true than in the esoteric world of decentralized finance, right?
Yeah, that's a great question. Actually, I've been very, very heavily involved in interacting with regulators, responding to any consultation papers,
Yeah.
and so on and so forth. Because in 2017, in February, I forget when, in 2017, I was one of the co-founders of a regulatory-based body, an association in Switzerland, which is a global association, which is designed to defend the narrative and the narrative of on-chain asset management, so that we don't get shut up or dictated by the big banks or the incumbents, right?
Yeah.
I really strongly believe that it's important that DeFi, or in my case specifically, in our case specifically, on-chain asset management, needs to have a unified voice, because we're all still relatively small fish, and we need to be making sure that our voice is heard. And there's a higher likelihood that our voice is heard if we're collaborating together to make sure that we are addressing points or responding to papers that regulators or governments ask, when governments or other people ask for feedback. And so we've been very, very involved working with European regulators and beyond, in terms of addressing those issues, together with the 60 members that have joined our association. So where will it go from here? I'm seeing some really positive signs in terms of, I think some people in the US are lobbying for a 3-year safe haven for DeFi. I think in Switzerland, they're making really good progress in terms of the DLT regulation at a federal level, to give some flexibility to these innovators, which is, by the way, a lot of the incumbent banks are trying to block that. So it's really, again, re-emphasize, really important to get involved with an association like ours. Not necessarily, it doesn't have to be ours, but just make sure that you're doing your bit as a DeFi protocol to speak up for the narrative of DeFi. Regulators have to understand that they can't really stop these technologies, and that if they do try, that they're somehow blocking innovation and blocking something that could potentially be very good. But not everything that is happening in DeFi is good. And so I think that it's a sensible thing to enforce, very clear disclosures, enforce the fact that protocols are audited, enforce the fact that, maybe users should be strongly advised to buy insurance when investing in DeFi protocols. I think that those are the types of things that regulators and lawmakers should be focused on, and less trying to control where the innovation goes.
I think that is very nicely said, Mona. Could not agree more. And look, on those thoughts, let's go to a very quick break, and then we'll come back and we'll finish off with the Crypto Conversation hot take round.
Awesome, thanks.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
All right, we're back, and I am with Mona Elisa. Mona is the founder of the Melon Protocol. Hey, Mona, I like to finish each Crypto Conversation podcast with a very quick round of rapid-fire Crypto Conversation hot takes. Are you up for it?
Let's do it.
All right, I just want your hot takes, your hot fire. Take your best shot. Here we go. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
Multi-coin opportunist all the way.
Yes, very good, very sensible, a very DeFi answer. Mona, what would you say is your firmest conviction crypto opinion?
50% of all assets under management will be managed on-chain in the next 15 years.
Wow, very bullish indeed. I love it. Okay, Mona, I ask every guest this question. Who do you think wins the American presidential election in 2020?
Biden.
Okay, we'll just have to see. Mona, Bill Gates famously said, we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What do you think the blockchain space, or DeFi if you like, looks like in 10 years' time?
That's a great question. I think I'm really excited for what it will look like in 10 years. I think that if you'd asked me where Melon would be 2 years ago, I probably thought it would take us longer to get here. But I think that I'm very proud of what our team has accomplished in 2 years. And I think given 10 years, I think that our team is now joining force with other teams who are building on Melon. And I think that 10 years from now, amazing things will happen in terms of user experience, functionality, returns for investors, insurance products, the range of assets available on chain, and the types of products, investment products you can invest in.
Brilliant. Bring it on. 10 years time. I like it a lot. All right. Well, Mona, sci-fi author William Gibson, he famously said, the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
All over. I mean, I think blockchain is a great example of it. I mean, just the fact that we have users who are, small users, but users who have set up their funds, managing their funds and attracting investors and making a return, like they're monetizing their talent already on blockchain technology, when the likes of BlackRock, Fidelity, Goldman Sachs probably are not even aware that technologies like this exist. For me, is a clear sign that the future is here. The future is here, and the pioneers, who are using it today, they're not thought of as pioneers yet because their funds are still small. But 10 years from now, I think we'll look back and we're like, hey, that guy that launched a fund on Melon Protocol, it started at $50,000 and it's now 50 billion. He's a pioneer. He saw that the future was here.
Boom, I love it. Exactly right. All right, it's time to get weird. Let's zoom out. What do you see as the long-term future for the human race, Mona? Do you see dystopia or utopia?
Literally no idea. I don't spend too much time thinking about it, but I think maybe probably a little bit more in the dystopia camp.
Okay, well, we'll just have to see. It does feel a bit that way at the sort of tail end of 2020. Finally, let's finish this off. The closing question, as always, is what is your favorite science fiction book, film, show, or universe? Oh, I love it. You're Googling.
I forgot the name. I forgot the name. I have a favorite, I swear. Boom, boom, boom. Where is it? It's obviously not favorite, is it, if I can't remember the name?
Or alternatively, do you watch Billions? I've always wanted to ask an ex-Goldman Sachs trader if they watch Billions.
No, I watched half an episode once, and I just felt that I found myself kind of nitpicking on the details and saying, well, it's not like that, and it's not like that in real life. and I think I just kind of ended up annoying myself and the people I was watching it with, and so I actually couldn't watch it.
Sure.
But I've heard it's great. I've heard from friends that it's great, but I just couldn't get into it myself.
Fair enough. And what about like being a female trader? Because what would be the percentage of female traders versus male traders at somewhere like Goldman?
Well, 15 years ago when I was there were probably, when I joined, 2 female traders out of, I don't know, a lot, like, 60, 70 maybe.
Yeah.
And I'm sure the numbers have gone up now, but what was it like? It was an aggressive environment. It was but yeah, it was actually, it was a very kind of adrenaline heavy environment. And I think I kind of like that kind of adrenaline on a trading floor. And I think once I was confident in my own ability, once I'd kind of gone up the learning curve, and I felt kind of, yeah, I'm actually quite good at this. And I could, I'd kind of earned the respect of some of the traders around me. It was a lot of fun.
I bet. And look, hey, that is a great place to finish, I reckon. So thank you very much for talking to me today. So there's nothing else to say, Mona, except the microphone is yours. So please take us out. Tell the people where they can go to find you on your various platforms and where they should go to find out more about the Melon protocol and what they need to know if they want to set up their own fund. Take it away.
Yeah, sure. So if you'd like to stay in touch with us, the best place to follow us is usually Twitter. We have most of our updates there, and it's Melon Protocol on Twitter. We also are active writers on our Medium channel. I think that is Melon Project. That's also Melon Protocol. And then we also have a very active Telegram channel and Discord channel, which is community run. You can find all of the details on the website, the general website, melonprotocol.com, which has links to all our social media channels. And if you want to write to us or contact us, you can also write to team@meloncouncil.com. And yeah, we're always happy to chat to new users, new ecosystem players, etc. And hear, what problem we can help you solve.
Brilliant. All the best, Mona. Thanks very much.
Thanks so much, Andy. Take care.